In August of 2023, the fashion giant Tapestry agreed to acquire Capri Holdings for $8.5 billion. Tapestry is the parent company of the Coach and Kate Spade brands. Capri is the parent company of the Michael Kors brand. Combined, they would form a global powerhouse in the luxury handbag market. The Federal Trade Commission sued to block the deal on antitrust grounds. In October of 2024, a judge sided with the FTC, effectively killing the deal. The decision came as a shock to Capri's shareholders. The Michael Kors parent saw its share price cut in half right after the judge's decision was announced. The fashion industry is one of the most competitive industries in the world and has historically not been prone to monopolies. Established fashion brands decline and new ones emerge all the time. If you walk into a shopping mall, you can probably find hundreds of different handbags made by dozens of different brands. It's hard to imagine that a handbag monopoly is even possible. To make matters worse, it's unclear if Capri will be viable as a standalone company. Due to difficult macroeconomic conditions as well as strategic missteps, the company's revenue and profitability have collapsed over the past 2 years. In today's video, we'll take a deep dive into the unique economics of luxury handbags. We'll then look at why the Tapestry-Capri merger was blocked, and why this came as such a big surprise to most analysts. While the luxury handbag market may be under pressure, one industry that's booming is AI. With Meta, Google, Microsoft, and other tech giants investing in artificial intelligence, it's more important than ever to get an understanding of how these models work. Understanding generative AI can provide a huge boost in your career, as well as your personal productivity. And thanks to today's sponsor Brilliant, you don't need a computer science degree to start learning. Brilliant is a learning platform offering courses in data analysis, programming, math, and more. Their first principles approach helps you build understanding from the ground up. Each lesson is filled with hands-on problem solving that lets you play with concepts, a method proven to be 6 times more effective than watching lecture videos. For example, their How LLMs Work course gives you a peek under the hood of how large language models like ChatGPT work. To the layperson, these AI chatbots can feel a bit like a black box, so taking this course is really eye-opening. With Brilliant, you can become a little bit more knowledgeable each day. It's like the opposite of mindless scrolling. To try everything Brilliant has to offer for free for a full 30 days, visit brilliant.org/wallstreetmillennial or scan the QR code on screen, or you can click on the link in the description. You'll also get 20% off an annual premium subscription. And now back to the video. Handbags are the single most widely purchased fashion accessory in the world. Purchased mostly by women, handbags have 2 distinct purposes. Firstly, there's a functional purpose. You use a handbag to store personal items like your wallet, phone, and keys. Aside from the functional utility of the handbag, they can also act as a fashion statement. People buy certain handbags to express their style, personality, and signal their socio-economic status. There are a wide range of handbags available to consumers. You can go to Walmart to buy a bag for $13, or go to Hermes to buy a Birkin bag for $30,000. A multitude of factors influence consumers' decisions of which handbag brand they buy. Everything from price and build quality to style and brand perception. Now let's take a closer look at Tapestry and Capri and why they wanted to merge. We'll start off with Tapestry, which is the parent company of Coach, Kate Spade, and a luxury shoe brand called Stuart Weitzman. In the most recent fiscal year, Tapestry generated $6.7 billion of revenue, of which 76% came from Coach, 20% came from Kate Spade, and the remaining 4% from Stuart Weitzman. Stuart Weitzman is too small to matter and not really relevant for the purposes of this video. Founded all the way back in 1942, Coach has more heritage than any other American handbag brand. Their bags are primarily known for their high-quality materials and craftsmanship, with most of their bags being made of real leather. Most of Coach's bags sell for approximately $300 to $500. In 2017, Coach paid $2.4 billion to acquire another handbag brand called Kate Spade. Immediately following the acquisition, Coach changed its corporate name to Tapestry. Kate Spade was founded by its namesake designer Kate Spade in 1993. In contrast to Coach, which has a more conservative leather style, Kate Spade appeals to young, independent women who want to live an elegant but also adventurous lifestyle. Kate Spade is roughly on par with Coach in terms of pricing. Most Kate Spade bags are priced between $250 and $500. Both Coach and Kate Spade sell other products besides handbags, everything from clothes to wallets and watches. But handbags are still their biggest category, accounting for roughly half of Tapestry's consolidated revenue. Now let's look at Capri Holdings. Capri is a little bit smaller than Tapestry, having generated $5.2 billion in the most recent fiscal year. They own 3 brands, Michael Kors, Versace, and Jimmy Choo. Michael Kors represents 68% of Capri's revenue, and 96% of its operating profit. Michael Kors was founded by its namesake founder, Michael Kors. Mr. Kors is something of a legend in the fashion industry. He started designing clothes as a teenager and made them by hand in his mother's basement. He first launched his own luxury fashion brand in the 1980s, but this ended in failure. He realized it was very difficult for a new brand to break into the ultra-luxury segment. So in 1997, he relaunched his brand with simpler products at more affordable prices. Michael Kors sells a wide range of fashion products for both men and women, but their single largest category is women's handbags, which is what they are most well known for. If you look at Michael Kors' marketing, they emphasize glamorous and luxurious settings. They clearly target aspirational consumers who want a high-class look. Most of Michael Kors' handbags are in the $200 to $500 range. In terms of pricing, they are very similar to both Coach and Kate Spade. Michael Kors is a relatively luxurious option for aspirational consumers who can't afford to spend more than $500 on a bag. Remember that Capri also owns two other brands, Versace and Jimmy Choo. They are far more expensive and prestigious than Michael Kors and have only limited customer overlap. The handbag market can be stratified into three segments: mass market, accessible luxury, and true luxury. Mass market includes fast fashion brands like Zara, H&M, and Forever 21. Their handbags typically lack visible logos and cost less than $100. They are generally manufactured in China or Southeast Asia and are made from synthetic materials. Accessible luxury includes brands like Coach, Kate Spade, and Michael Kors. The brand names are prominently shown on their bags. Accessible luxury bags are also made in China and Southeast Asia, but they use significantly higher quality materials and much more labor hours are spent to manufacture each bag. Accessible luxury bags are priced between $100 and $1,000. Finally, we have the true luxury brands, almost all of which are European. Think of Chanel, Louis Vuitton, and Hermes. True luxury bags are typically handmade in Europe and cost more than $1,000. Some can cost tens of thousands of dollars. As we will see shortly, the distinction between these three different market segments will become a major issue in the antitrust litigation. In August of 2023, Tapestry signed a definitive agreement to acquire Capri for $8.5 billion. The three brands Coach, Kate Spade, and Michael Kors have combined annual revenue of approximately $10 billion. This would make the combined company the largest handbag maker in the United States by far. Prior to the merger announcement, Capri's stock price was about $35. The acquisition price was $57 per share. Capri's share price immediately surged to $54. In April of 2024, the Federal Trade Commission filed a lawsuit to stop the merger, alleging that it would violate antitrust laws. Following the lawsuit, Capri's share price collapsed. By August, it fell to as low as $30, which is even below where it traded before the merger was announced. But then Capri's stock price inexplicably surged to $43 by October. So what happened? When the FTC sues to block a merger, the merging companies have the option to fight the case in court. Historically, the FTC has a very high win rate because they typically only bring cases if they think they will win. However, under the current FTC Commissioner Lina Khan, the Commission has taken a far more aggressive stance. They've attempted to block mergers based on novel and dubious interpretations of antitrust law. This aggressive approach has led to a number of high-profile losses in court. For example, they tried to block Microsoft's acquisition of the video game maker Activision. In 2023, a federal judge sided with Microsoft and allowed the deal to go through. Gradually, a consensus formed on Wall Street. Investors believed that Lina Khan was overstepping her bounds, and many of the FTC's enforcement actions were likely to fail. That's why Capri's stock price increased so much between August and October. Investors became increasingly confident that Tapestry would prevail in court. To get a sense of investor sentiment leading up to the court decision, let's look at some articles in the financial media. This Bloomberg opinion piece published September 27th explains that the combination of Tapestry and Capri would still be much smaller than some of the European luxury conglomerates. How can the fifth largest luxury fashion company possibly be a monopoly? Both Tapestry and Capri really wanted the deal to go through. They even made a new website whose sole purpose was to explain why the merger would actually be good for consumers. They argued that the combined company would have more resources to invest in product innovation, thereby allowing them to more effectively compete against their larger European counterparts. Obviously, the FTC took a very different view. The argument ultimately boils down to how you define the relevant market. Remember that the market for handbags can be separated into mass market, accessible luxury, and true luxury. Tapestry and Capri's lawyers argue that they compete against all handbag manufacturers. The FTC argued that Tapestry and Capri only competed within the accessible luxury segment. The combined company would have approximately 59% market share of accessible luxury handbags in the US, a very large market share indeed. Let's think of this from the perspective of a consumer. You want to buy a new handbag. Let's say you have a maximum budget of $1,000. European luxury brands are not an option. In fact, the FTC was able to find econometric data which showed relatively little overlap between true luxury and accessible luxury customers. Most of the people who buy Coach or Michael Kors can't afford to buy Louis Vuitton or Chanel. If your budget is less than $1,000, your only options are mass market or accessible luxury. As we discussed earlier, mass market bags are typically unbranded and made from cheap synthetic materials. These types of bags may be undesirable to many consumers. If you want to buy a high-quality handbag from a respectable brand for less than $1,000, you really don't have many options. If you walk into a shopping mall, there's a good chance there will only be 3 brands that fit these requirements: Coach, Kate Spade, and Michael Kors. Perhaps the most damning evidence in the trial came from the so-called hot docs. These are internal documents and communications between executives and other corporate employees talking about the merger. During the trial, both Tapestry and Capri were required to turn over thousands of pages of internal communications. When Tapestry was considering whether they should acquire Capri, they made an internal presentation discussing the pros and cons. In the presentation, they listed that one of the benefits of the merger was to reduce Michael Kors' discounting. Whenever Michael Kors discounts its prices, this takes away customers from Coach and Kate Spade. Coach and Kate Spade must do their own discounting in response. If all 3 brands are owned by the same company, they would never start these discounting wars. The reduction in discounts would increase the average selling price for all 3 brands. This is a textbook case of anti-competitive strategy outlined in an internal corporate presentation. It doesn't get much more damning than that. Of course, there's a limit to how much they can raise prices. If they raise prices too much, they will eventually start competing with the European luxury brands, which they are ill-equipped to do. But they could certainly increase the average selling price from $300 to $350, for example. The company's lawyers tried to argue that the handbag market would remain extremely competitive after the merger, but these arguments were difficult to believe when internal company documents said pretty much the exact opposite. On October 25th, a federal judge sided with the FTC and blocked the merger. This came as a big surprise to most investors. Capri's share price was more than cut in half the next day. One of the reasons the ruling came as such a surprise was because the public versions of the court documents were heavily redacted. These redacted sections may have included more hot docs, which were even more damning than what was released to the public. Only having access to the redacted versions, market analysts may have underestimated how damaging the internal communications were. The blocking of the merger was a disaster for Capri's shareholders. The Michael Kors brand has been on the decline for the past couple years. Now that they can't be acquired, they will have to continue as an independent company. At the time of recording this video, Capri's stock price is $20.52. This is 15% lower than their initial public offering all the way back in 2011. In the fiscal year ended March 30th, 2024, Capri's consolidated revenue declined by 8%. All 3 of their brands declined, but the biggest drop was from Michael Kors. In the quarter ended June 29th, 2024, their revenue declined by a further 13%. As the company's revenue has fallen, so too has its profits. Over the past 2 years, Capri's operating profits were cut in half, from $1.2 billion in 2022 to $662 million in 2024. Capri's fiscal year 2024 is the 12 months ending March 30th, 2024. Despite technically losing in court, Tapestry may have come out as the biggest winner. They agreed to acquire Capri all the way back in August of 2023. Since then, Capri's financial performance has deteriorated significantly. Tapestry had already signed a definitive agreement, and the purchase price was set in stone. In light of its deteriorating performance, the $8.5 billion acquisition price would massively overvalue Capri. The only way Tapestry could get out of the deal is if the government blocks it. When the verdict was announced, Tapestry's share price increased by 13%. Since its inception, Michael Kors has tried to portray itself as an aspirational brand, allowing consumers to signal their socioeconomic status. They were a luxury brand for people who couldn't afford European brands. For many years, this strategy worked brilliantly. The brand's initial success made them complacent and greedy. They expanded rapidly, opening hundreds of stores around the world and securing distribution in many large department stores. They made too many bags, which they found difficult to sell. This obliged the company to pursue aggressive discounting, sometimes offering as much as 70 or even 80% off list price. Bags with list prices of $500 sometimes sold for less than $100. The lack of scarcity and frequent discounting made Michael Kors lose its appeal as a luxury brand. To make matters worse, the brand is famous for its loud logo placement. Many Michael Kors bags are covered in the MK logo. Back when the brand was prestigious, this was a good thing. Consumers wanted the world to know that they have an expensive bag. but the loud logo placement is a double-edged sword. As the brand's prestige has declined, this has become a negative. Walking around with a Michael Kors bag now makes you look like a wannabe. Alright guys, that wraps it up for this video. What do you think about handbags? Do you agree with the judge's decision to block the merger? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.